announcement trading today. There's a whole field of economic announcement traders out there who like the risk, they like the movement, they like the momentum and the excitement of those announcements because there's lots of movement in the market, and therefore there's the perception of a lot of opportunity for making money around those announcements. And there is, if you really know what you're doing. If you don't know what you're doing, economic announcements can take the shirt off your back because they move so quick. There's so much volatility in many of them. I have a strategy that allows people to take advantage of economic announcement trading. I call it the EAT strategy. And in order to learn this strategy, you have to be fairly knowledgeable, not just a little. You've got to have a lot of knowledge about Elliott wave, complex correctives, how to track sideways consolidating markets and so forth, so you can read where the market is just prior to the economic announcement. Understanding where that is gives you an opportunity to understand whether that market's going to give you a head fake at the beginning of the economic announcement, shooting or spiking slightly in one direction, then taking off in the other direction after that. Having that knowledge will also teach you whether or not it has to complete yet a 5-wave cycle before it can take yet another turn. For instance, on a let's take a non-farm payroll announcement as an example. A non-farm payroll announcement takes off about 6:30 in the morning. Well, that's my time, Mountain Time. 8 o'clock in the morning or 8:30 in the morning, New York time. And there's a lot of volatility usually in the first 20 minutes, 30 minutes of that session. That's the initial reaction of the market. And there are specific types of patterns that economic announcements take. There's quite a number of them. I can make, in fact, I got a whole list of them I give to my advanced students. Those economic announcement patterns are repetitious. They happen over and over and over again in the market. They're directly correlated with Elliott wave theory or principle, and they can be tracked, anticipated, and planned for ahead of time, before the announcement happens. Now, you all know how hard it is to get into a highly volatile announcement once it's already taken off and the market's on the move, because the brokers are going to increase the spread rates dramatically. They figure, if you're going to get in this trade, I want a piece of the action, buddy. Okay? Otherwise, you're not getting in. Problem is with economic announcements, if you get in at too wide a spread rate, you have to overcome an awful lot of spread before you start making profit. The broker's going to win every time, no matter what. But you may lose if you get in too late and still have a wide spread to overcome. So most people trading around economic announcements, if they're smart, if they're wise, because they don't understand how to anticipate what's going to happen before that announcement, they're going to get in when the trend is already established. Once they can see where the trend tends to be moving, and once the market has slowed down enough that the spread rate decreases so that they're not paying exorbitant spreads. The key to this, if you want to be able to learn how to take advantage of the greater portion of those announcement patterns, of the greater volatility, and be smiling all the way to the bank, is to learn how to anticipate where it's going before it happens. You think you can't tell that? Wrong. You know Elliott wave, and you know it like the back of your hand, so you can read where that market is before the announcement is. The pattern will finish the Elliott wave pattern before the announcement can go anywhere else. Before that market can move anywhere else, it's got to finish the pattern it's in. To do that, you have to know Elliott wave. You learn that, you learn my EAT strategy, you're going to be feasting on economic announcement trading. This is Stephen's story with Tips on Trading.